Home prices are starting to crack, and it's not just here in Phoenix, as we talked about last week. We're seeing this in other areas of the country as well. We're going to get into that, see what the numbers look like, and also the question that came up is, when will we see mortgage rates back at 4%? We're going to take a look at that today. So let's get into it. Thank you for joining me, you guys. Home prices are falling in 11 of the 50 most populous U.S. metros, the most in 19 months. This is according to an article from Redfin. They're saying that nationwide home prices are up 2.1% year over year, but that is the slowest growth rate that we've seen in nearly 2 years. They go on to say that these metros that are seeing the home price declines are San Antonio, Oakland, California, Jacksonville, Florida, and Phoenix, Arizona, Austin, Texas, Dallas, Orlando, Sacramento, Fort Worth, Texas, Portland, and Nashville. So a lot of those areas, definitely those places where we saw big home price growth over the last few years, and now starting to see some weakness, in particular like Nashville, Austin. Those were always hot on the list of places that we're seeing those prices increase so rapidly. They say that home prices are falling in these metros mainly because house hunters are backing off, but the number of homes for sale is holding up. Home tours are slowing, mortgage purchase applications are falling, and Redfin agents in many parts of the country report that would-be buyers are ultra cautious amid high housing costs and widespread economic uncertainty. We're also seeing that pending home sales are down slightly year over year by 0.3%. Now, we talked about this last week on my channel. We were looking at the numbers here in Phoenix and seeing that not only is the average price per square foot going down, but so is the median sales price. So if you want to check out that information, make sure you take a look at last week's video. You can catch that right here. Now, while all of this is not the best news for sellers, it is good news for buyers because affordability is increasing, not only on the front of home prices, but we've also seen a little bit of movement in interest rates as well. And we'll talk about that in a minute. They're saying the U.S. median monthly housing payment is $28.48, which is just $8 shy of the all-time high, as weekly average mortgage rates jumped to 6.83% from 6.62%. This is a little bit dated, and so we'll look at rates here in just a second. But what we are seeing is that this affordability is actually not getting worse for the first time in years. So that is good news if you're a buyer. Now, if you are someone who's thinking about buying and have been waiting to see some cracks in affordability, check out the description below. I have a link to a mortgage calculator that could give you a better idea of what a payment would look like. Now, last week we covered all of this information, the monthly median sales price, and you can see a pretty big dip here to about $446 from $460,000. And this is just since March until today. So last week I was talking about how home prices were plummeting, and a few of you were not happy with that verbiage. And really, the Cromford report is referencing that because of the short timeline that this change has taken place. And you can see, like, even when we had this change here, this was May 2024 to July 2024, it still wasn't, it didn't happen as quickly. And that went from 455 to 442. So that's what they're calling out in this big change in prices. And you can see another time where we saw a big change was in 2022. Not shocking. This is when interest rates went up. It's when a lot of the inventory started to increase and buyers were on the sidelines. And so between that June timeframe to December, we went from 477 as the median sales price to 415. So we're seeing this in the median sales price. We're also seeing it in the average price per square foot. But one thing I wanted to take a look at is list prices, right? Because if the list price per square foot starts to trend lower, then we're also going to see those sales prices trending lower. And if we look at this chart, we can see we peaked for our average list price per square foot in February. And it's gone down until we got to about March. It jumped up a tiny bit, but we're basically not too much further from where we were at when we got to this trough in February. So this has been moving somewhat sideways since it came down quite a bit, but I wouldn't be surprised if I saw this continue to go down, which would then be reflected in sales prices. Now, every week we've been looking at active listings because one of the reasons we're seeing this crack in pricing is because we're seeing a lot of inventory on on the market and not a lot of buyers scooping those up. So another week, another climb in inventory. We're at 26,673 as of today, active listings on the market. This doesn't include anything that's already under contract. So these are actual active and available listings, just steadily increasing. And just for reference, you can see where we were at last year at this time and how we ended the year. Definitely significantly more inventory this year compared to last. We were at about 17,000 at this time last year. Not only that, but April is not yet over and we have beaten the number of new listings this month as compared to the last 2 years. So every single month so far this year, we've had more new listings come to market than we have in the previous 2 years. April is no exception at 9,092 new listings, and it's still going to continue counting. I think this is a little bit delayed. So as we finish out April, we'll see the total count for new listings in April. So when will interest rates go back to 4%? Let's talk about this article that I found. Before we get there, if any of this is helpful for you, make sure to consider subscribing or share it with someone who might find this valuable. I saw this article and I thought it was pretty good at kind of breaking down the history of mortgage rates, because I think sometimes many people forget that 2% rates is just not normal. Even 3%, not really something that we'll likely see very easily again in a short period of time. And the long-term average for mortgage rates is actually about 7%. But this is pretty good at breaking down what has happened over time and what may need to happen in order to get rates back down again. So they're saying that average interest rates for 30-year fixed rate mortgages have hovered above 6.5% this year, even after the Fed has cut 3 times in 2024. So we obviously had very low rates during the pandemic timeframe, but we also have seen periods of low rates before. So they're talking about the 2010s. So what drove 4% mortgage rates in the 2010s? This was the lowest rates in history at the time. They reached 3.35%. It was because of the years-long response to the 2007 financial crisis. Obviously, they're saying the Fed, lowered federal funds rate to near 0%. They did something similar during COVID, and purchased large amounts of treasury bonds and mortgage-backed securities, which encouraged lending and made borrowing cheaper. So that's essentially what happened during that time to bring mortgage rates so low, and very similar to what happened during the pandemic. And they're saying that a return to 4% mortgage rate would likely require a deep recession, a sharp rise in unemployment, and more aggressive monetary stimulus. So as I always say, bad news for the economy is usually good news for mortgage rates. So, it can be great if you're thinking about buying, but you also likely need to have a job if you're trying to buy a home. So the two don't always go very well together. It's saying, should you buy a house now or wait for rates to drop to 4%? The age-old, trying to time the market rarely works in real estate. And I would agree with that. It's fairly impossible. I'm always saying if you need to buy for a particular reason, like you're looking for a home to invest in rather than rent and you plan to be there long term, then I think it is a good time for you to buy. If you're just trying to flip a house, I don't know if now is the right market to try to dive into something like that. So long story short, we have to see some economic turmoil in order to see rates go back to probably 4% or even lower. And as of right now, although we have seen a lot of shakeup in the markets, we aren't seeing anything that's indicating rates are going to go significantly lower at this time. Speaking of rates, mortgage rates start new week slightly lower. They ended last week at the lowest levels since April 7th. And as the week continues, there are more and more scheduled events with the power to cause intraday volatility. So basically saying, keep an eye on rates because we're going to be getting some economic news this week that could change things. I think we'll be getting the inflation readings. We're also getting jobs reports. So it could be a big week in terms of economic news that could impact markets and therefore rates. Where we stand today, we're at about 6.84. You can see we've come down, or 6.82. We've come down a bit from where we were at with all of the volatility. So that is good news if you're a buyer. It's also good news if you're a seller, because as these rates come down, it does spur more buyer activity. So likely you'll start to see some more activity on your listing. So let's talk about what's going on there with the Phoenix market, with sellers in particular. You'll notice on this CMI chart that we're seeing the most green arrows that we've seen in a while. They're usually pretty red, and we're seeing all of these green arrows in the cities that have the lowest CMI reading. So I found that interesting. However, the Cromford report is saying, does this mean that this deteriorating market is coming to an end? And they say no, not exactly. The average change in the CMI month over month was negative 2.8% this week. Last week, the month over month change was negative 2.7%. So very slight difference there, but still moving in that direction that is more favorable for buyers versus sellers. Now, what the Cromford report is saying is that supply continues to increase, demand is not moving that much, and we would need something new to happen to spark a significant improvement in demand. Prices are starting to decline, so are mortgage rates, so affordability is on an uptrend. Movement is pretty slow for interest rates, but quite sharp for prices. And they say, we deduce that a clear downward trend in home prices has now been established. With the hottest months still ahead of us, that is not likely to reverse anytime soon. So what does this mean? If you're a buyer, it's exciting news that prices may continue to go down lower, especially in the slower season. If you're a seller, it's not the best news, because we've already seen prices go down. They're saying that this is now a trend. We're likely to see them continue to go down further. And summer is not the peak time to be a seller anyway, just based on kind of the lack of buyer activity that we have here. So it may not get any better for sellers over the coming months. We'll see if anything changes, but where we're at right now on the CMI is 77.4. So we are definitely in a buyer's market throughout Phoenix Metro. Demand at 82.1. So that's about 18% below normal. Supply at 6% above normal at 106.1. Those two continue to get further away. Demand has been hanging in there, not going back below 80. So that's encouraging. But it sounds like, just from what we're seeing in these trends, and particularly knowing the new season we're going into, it could be a slow and tough time for sellers. So if you're a seller who's just curious of what your instant home value could be if you were to list on the market, check the description below. I have a link where you can get that info. Now, for the contract ratio, we're seeing everything stay pretty stable as to what we've seen over the last few weeks. There are a few zip codes that have warmed up a bit, but most are in that balanced warm range. However, 85224 in Chandler is a little bit warmer, 850444 in Phoenix, some West Valley cities as well, but most of it in that green, balanced, warm area for the most part. A few areas that are a bit cooler, cold areas in kind of central Phoenix. So some of those blue areas are more on the colder side. So buyers, if you've been sitting on the sidelines waiting for prices to come down, the good news is they are heading in the right direction. So if you're ready to start that search, I do have a link where you can search our MLS for homes for sale. Also, feel free to set up a discovery call with our team, and we can talk to you more about what that process looks like and how to get started. Thanks so much for joining me this week on this week's market update. I will see you guys next week.